something, 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 slate. The scenario we'll talk about here is what to do with your stock options when you leave your company. Well, first, I hope you're on to bigger and better things. It's exciting. There are just two things that you should think about when you're leaving your company. One is that any options that haven't vested by the time you leave are unfortunately gone. The second is that you may only have 90 days to exercise your options from the time you leave your company. This could put you in a difficult situation because you have to figure out what to do with your options now in a very short period of time. Also, the option to cashless exercise at the IPO may be gone. Are there any exceptions to the 90-day rule? By law, any ISOs are automatically forfeited 90 days after you leave your company. There's really no way around that. Some companies are starting to offer extended exercise deadlines after you leave, maybe an additional year, 5 years, 7 years, which is great. It's very employee friendly and gives you more time. The problem is after 90 days, those options will then be treated as non-qualified stock options and lose the favorable tax treatment. Should you always exercise your options after leaving the company? Exercising options is basically making an investment in the company. So you should exercise if you want to hold that stock, if you believe in the company, if you want to own the equity that you've worked for. Sometimes those costs can be prohibitive. Sometimes the taxes are too large. Sometimes the risk is just too much for you. That's where non-recourse financing can be a perfect solution. If you don't know what non-recourse financing is, we have a specific video defining that term. If your company offers you an exercise deadline extension in exchange for converting your ISOs to NSOs, should you take it? If you're planning to exercise your options anyway, it's in your best interest to exercise while they are ISOs. The additional deadline will give you time to think about it, may give you time to save up some money as well, but you do lose the favorable tax treatment of the ISOs. So if you can exercise, do it. If you need the extra time, take it. If you think you want to exercise your options, but don't necessarily have the means to do so, or you want to mitigate the risk, feel free to talk to us. We're happy to talk through the decision with you.